welcome back. Well, not too long ago, the real estate startup WeWork was a rising star until then CEO Adam Neumann decided to take the company public in what would ultimately become a failed IPO, thanks to questions and concerns over the company's financials. Now, our next guests have charted the spectacular rise and blazing fall from grace for the former WeWork CEO Adam Neumann, and they pull back the curtain on the startup unicorn. We're joined now by Wall Street Journal reporters Eliot Brown and Maureen Farrell, co-authors of The Cult of WeWork, Adam Neumann and the Great Startup Delusion. Great to have you both here with us. So let's just start with this. If you had to pinpoint, the reason behind WeWork's failure, essentially boiling down what you have uncovered throughout this book, this expose, what would that reason be? Does it all fall squarely on Adam Neumann's shoulders, or do you think there is plenty of blame to go around?
I'll start. I think, we think in sort of the main theme of the book is it's the whole finance system that created this. And there was just so much money pouring into this concept of founders who had visionary ideas that this was the result of what happened. This guy had full control of a company. He had sort of messianic type views, which is what venture capitalists in Silicon Valley were looking for. And when you sort of combine those, it was this toxic brew that when mixed with tequila and jets led to the sort of result we got here.
Maureen, when you look back, I think a lot of people forget WeWork was actually a functioning company. When it made a profit all the way back in 2012. What happened? When did it all start to go so wrong?
So it had this one brief year of profits. From there, you could start to see it when the venture capital funding started coming in. It started getting more and more money, and Adam Neumann, the whole team, started spending it. And after 2012, you basically see this company chart this incredible growth path. You could walk into any city around the world almost and see a WeWork, yet the company was losing just as much money as it was spending. And Adam Neumann, masterfully kept on finding new pockets of money in the private markets, kept on expanding, and just didn't have people sort of putting the checks and balances on him to say, how is this going to be a profitable company? And he was always saying, oh, we'll be profitable any minute. And then the public markets came, and there was the real check on him.
Eliot, when I think about this story and even just, hearing your answer just a moment ago, I think so much about how Adam Neumann as a CEO and a visionary and figurehead for the company, but also WeWork itself is really a cautionary tale, especially as we see so many companies going public and there's lots of questions around profitability. And there's also just so much greed right now going on in this market. What do you think one of the big lessons is learned, perhaps, from this whole WeWork debacle that folks like yourself and, me and Alexis, other financial reporters, but also folks on Wall Street and investors really should be taking heed of?
I think that there's sort of two parts there. I don't think the market has really learned many lessons. You see a lot of the same stuff that was happening with WeWork going on in different pockets. I think as a journalist, one of the things that I took away from this is you just have to employ more critical thinking, and it's not that hard. I'm not that smart. We wrote a lot of stories about how this appeared to be an overvalued real estate company, and the finance system wasn't doing that. So I think when you have a bubble, you really tend to obscure critical thinking in a way that's really important, and it's important to keep track of gravity.
Yes, it is. Well said. Important to keep track of gravity. And you're right. Lots of companies are not doing that. Lots of venture capitalists. Maureen, what about the big guys? The firms like the JP Morgans of the world, did they not take a close look at this S1 filing? How did so many red flags get missed along the way? And I must say, this is not the first time we've seen this happen with a company. It's been going on for decades. But what in particular maybe, got in the way for those who should have known better not to see it?
I think it was two things. Number one, this FOMO. We write about this a lot, this fear of missing out, and Adam Neumann pushing the envelope every step of the way, and everyone sort of being scared to stand up to him. You'd think, the titans of the finance industry, like JP Morgan, Goldman Sachs, Fidelity, that they would, why did they should have the power, not Adam Neumann. But there was this fear, there was so much private capital. And then getting to the public markets, there was this fear of, wanting to be the bank to take WeWork, be the lead advisor to them going public. And Adam Neumann played that every step of the way. So there were red flags. They were pointed out. There were just so many of them. The banks and WeWork were kind of drowning in these red flags, and they would push back a little bit, but people just did not stand up to them. And it was, just a complete wreck when they tried to get to the public markets, and the public at large saw all these red flags and wouldn't put up with them.
Eliot, I think several examples have been published about some of those conflicts of interest, from Adam Neumann essentially renting his own property to WeWork, paying exorbitant sums to trademark the word we, to even their S1 filing, which was strange. Some of the language that was in there around the essence or the energy of we, I can't really remember right now off the top of my head. The energy of we, exactly. But as the two of you were doing, so much of the research and investigating, I'm curious to know if you can share perhaps some of the lesser known, surprising, perhaps more egregious, weird, strange examples of that greed, of what you guys call that greed, of that almost cultish-like vibe that existed at WeWork.
Yeah, so I like to break it into two components. There was sort of the grandiose lifestyle and some things. I mean, Adam was always getting in trouble with private jet owners that he was renting from for spitting tequila was one thing that happened on a jet that he was on. Another one, the oxygen masks needed to be employed by the crew because there was too much smoke from marijuana in it. So he was going surfing constantly. He got a yacht for his 40th birthday in the Maldives and had all his friends go there. He had a hairdresser that followed him around, and school teachers from their own elementary school. So that's sort of one bucket. And then the second is the personal enrichment bucket from WeWork. And yeah, I mean, he just at every step of the way, he took money out of the company. He would get these giant loans from the company, and then he would at the very end he negotiated so he was paid hundreds of millions of dollars to go away from the company that he built up and burned a lot of money at. And he had restructured the entire corporate system within the structure of WeWork so he could get a better tax benefit on some of his compensation. So it was I was continually surprised about his sort of avarice.
Wow. Yeah. You kind of forget all the kind of crazy things that Adam Neumann did. I'm going to put this to both of you, and either one of you can jump in, or both of you. But it seems like WeWork is getting a second chance, and it has plans to go public now through a SPAC, which has become very popular, these blank special acquisition companies. Do you think that the market is going to embrace WeWork, especially in a post-pandemic world when, shared office space may not be top of mind for everybody right now?
I think it's going to be a really interesting time for them now, particularly, I mean, as companies are cutting their office space. I mean, I think it's a huge question mark right now going forward, how they're going to fare. But you could see a world in which companies cut office space back, people work from home more, and give part of that office space they used to have to WeWork. I think it's a little too soon to tell, and the market's jittery. They've got the SPAC deal done, about $8 billion. I mean, they once were valued at $47 billion, but it was up from $2 billion. So there's some signs of a comeback, but I think it's a little early to tell just yet.
All right, we'll have to leave that there. Eliot Brown and Maureen Farrell, authors of the book, The Cult of WeWork, Adam Neumann and the Great Startup Delusion. Thank you both for joining us today.